Good morning. This is Connor from 0DTE Traders here to present the week ahead for August 11th, 2025. In this video, we'll analyze the SPX, GEX, volatility, and highlight key levels to watch this week. Let's dive in. This week, attention will be firmly on major inflation readings, any new developments concerning trade relations, and the Russia Ukraine situation. Unlike last week, there are multiple factors in play that could disrupt the balance of trade and perhaps spark that next directional move. On the economic calendar, CPI due out Tuesday, PPI due out Thursday. Both participants and the Federal Reserve will be watching closely for signs of tariff related impacts from Trump's trade policies on both the consumer and producer price level. Additionally, we have July's retail sales report due out on also on Thursday, with the Michigan consumer sentiment on Friday. So, packed calendar here this week. Now, according to the CME FedWatch tool, markets are now pricing in 88% probability of a September rate cut, up sharply from 37% just a week ago. This surge in expectations is largely driven by the weaker than expected NFP report, those two terrible downward revisions, as well as growing speculation over the imminent removal of Fed Chair Powell. A hot inflation report, whether that is CPI or PPI, could push these probabilities lower, potentially triggering a bearish market reaction. So these reports are going to be critical this week. On the geopolitical front, Trump is scheduled to meet with Vladimir Putin on Friday, suggesting a possible truce, some swapping of territories. Who knows? Potential headline risk there Friday. On the corporate front, earnings season continues. Dow Jones heavyweight Cisco, among others, are set to report. To start the week, the Gamma Index, a measure of dealer gamma exposure, is positive, 810 million notional, trading above both transition levels, 63.65 flip. Above, all strikes are positive, that is supportive for the market price. Most strikes below negative, that is destabilizing for the market price. In other words, above the flip, dealers buy weakness, sell strength, known as that buy the dip trade. Below the flip, dealers essentially chase deltas, selling weakness, buying strength, creating elevated volatility. We tend to approach markets a little bit more cautiously below the flip level. 6,300 is our secondary transition. This is the zero gamma level, known as a risk on risk off indication. It is where the gamma index actually turns from positive GEX to negative GEX. However, it's important to note that one day in negative territory does not constitute a regime change. We saw a negative print last week, and that was bought, and we squeezed higher, right? Vol crush. And we see this quite often. 2 days down, 1 day down. A matter of fact, this is a setup we play quite often. Now, Friday does mark monthly option expiration. It is a call weighted cycle, meaning more calls are set to expire than puts. We really wouldn't be surprised if the SPX sees another choppy range bound week, especially if inflation data comes in at consensus. This is typically the pattern into OPEX. The market stays supported by VANA, volatility contraction, charm, time decay, both generating buy flows that help maintain price levels. And then the week following OPEX is when we generally see that next directional move. However, this pattern can easily be negated if we get inflation data that significantly deviates from consensus, whether that's hot or cold. Last week's multi-day uptrend remains intact, printing a series of higher lows with an upsloping structure connecting the swing lows from 2 Fridays ago, last Thursday. So potential third test this week could be support. A break would be a bearish indication, potential reversal. There's also two gaps on the downside: 63.55, 63.39, 62.75, 62.38, both unfilled. Now, these are our levels for today, Monday. You can go ahead and mark these on your chart if you want. But as far as the upper bound goes, that's kind of what we're concerned about here, because we are in an uptrend. Last week, that was 6,400. This is deemed our call wall, simply defined by the strike with the highest net positive gamma. Last week, we were selling calls at 6,400. I think I took 4 short call trades at 6,400. Selling that call wall, a very, very high probability. Now, the question is it going to shift higher this week? We are seeing call gamma build overhead, most notably at 6,500. So there is good potential, if we get a close, a very positive close, at or above 6,400, we see that call wall shift higher to 6,500, which is essentially telling us that the market has potentially more upside. Now, something we also need to consider here is that 6,400 is quite, I don't want to say balanced, but it is, with the exception here of 6,000, it is the strike with the highest total gamma. That's calls plus puts. And the fact that we're going into monthly option expiration, we tend to see these big strikes be a little bit sticky. We tend to see them pin. So essentially, the market closing at these big strikes, the double zeros, the 50s, the big balance strikes. So we're going to be a little bit skeptical here of that short call trade at 6,400. Of course, price action dependent. Additionally, SPY 640 is the call wall. This is 6417 SPX equivalent. Now, again, not really balanced, but it is the strike with the highest total gamma. Could see pinning in there, which means we could see a move above 6,400 here this week. Now, we're not saying don't sell the call wall. We always want to consider that an opportunity. What we're saying is be a little bit skeptical here due to those dynamics. Lastly, let's touch on volatility. The VIX closed at the 15 handle on Friday, about 1 point below the lower bound of 16, defined by the open interest. However, VIX is up about 5% here in the pre-market, snapping back to that lower bound of 16. This is not surprising. Rarely can price sustain below a lower bound or sustain above an upper bound. And essentially, right now, we're at VIX lower bound, we're at SPX upper bound. Now, is this mean we're going to reverse? Not necessarily. It is a very challenging to pick troughs in volatility. The market could grind higher as volatility just bases sideways or even drifts slightly lower. And that's essentially where we are here from, let's say, a risk perspective. So further volatility compression or a lack of a volatility spike will provide some support to the upside. Unlikely to lead to any sort of squeeze conditions, at least at this juncture, but will be a supportive variable. In other words, maybe you see a bit of a morning spike if we get a rally, but it's probably going to die out and lead to more of a drifting type action. Conversely, if we do get a rebid in volatility, it will exacerbate the downside, a potential negative feedback loop. And then once you get that rebid in vol, then there becomes, risk essentially becomes two-sided again, and there's potential for a positive feedback loop. If you remember, we have educational content on this, but this is very important to be aware of these feedback loops, being able to identify them in real time, because we saw this, I think, 4 out of 5 trading days last week, and these moves persisted much longer than usual. So important to understand these dynamics, because if you don't, you may get caught, trying to fade the move too early. Lastly, let's conduct a quick performance check. Year to date, I'm up $193,000, 86% win rate. Clearly, my P&L here has gone, I would say, a bit parabolic. Obviously, some steady gains here in the first quarter, and then we jumped really quick from 50,000 to 100,000. This was like less than a month. Then obviously, as that account grows, so does the absolute returns. So overall, good year. We don't do anything super fancy. I mean, we have a system in place, how we analyze the markets, how we make decisions, and we really focus on the risk management, which is really what you need to do if you want to have a P&L curve like this, upward, steady, linear. So if you are interested in joining the team, you want to get access to our daily analysis, you want to learn our process and trade alongside myself and the team, sign up at 0DTEtraders.com. Best of luck out there this week.